Good evening and welcome to ET Now Startup Central, India's first and only daily show dedicated to startups, technology and entrepreneurship. I'm Chandra Srikanth coming to you live from the Nasscom Product Conclave right here in Bengaluru. This is of course the place where startups, entrepreneurs, investors converge once a year every October to discuss the future of product startups, enterprise startups. This time there's been a lot of interest around deep tech, be it artificial intelligence, machine learning, segments such as edtech, health tech, agri-tech, a whole gamut of them. And we are going to get you some of these interesting voices over the next 20 minutes. But let me just start off with a big voice, and that's Niti Aayog CEO Amitabh Kant. Now, he's spoken about the various measures that the government has taken at a policy level to help startups, how Indian startups can really build for the world. Listen in to Amitabh Kant talking at the Nasscom Product Conclave.
So I think the world is all open to us, and if we are able to crack problems of India, then the whole world is your market. The challenge really is that Indians constantly keep thinking of India as the market. And that's why our small industries remain small, our medium micro industries remain micro, and our small industries remain small. The challenge is to think big and think large and see how we can penetrate global markets. Now, one of the key things for our startups is that as you mature, how do you become an efficient company which can think of the global markets? Because if you look at companies across Japan, Korea, or China which matured, they never thought of the domestic market, but they used the domestic market as a springboard for the world on penetrating global markets. And therefore, it's very important the Indian mindset really is about the world. You can't be a successful, great company which will mature from a startup to a great company without thinking about the globe and penetrating global markets. And it's very important to think in those lines. There's a huge opportunity, firstly, on doing a lot of product innovation around electric vehicles. And whether we like it or not, 4 years down the line, the combustion car market will be a dead market. The electric car market will be a flourishing market. And therefore, from software to product innovation to product development, the whole world is your market for that. And therefore, this is an area, and if 76% of the vehicles in India are two-wheelers, and another 7 to 8% are three-wheelers, then the challenge is how do we put batteries on our two-wheeler option. And my view is that in the next 3 to 4 years, India will see massive disruption of people moving from capex to opex. That is, the charging will be all on per kilometer charge. So everybody will be charging on operational kilometer. And therefore, what you see today, I mean, the emergence of Ola or Oyo, all these, or even Flipkart, these were all based on great innovation, but they kept up in terms of technology. And technology, these wouldn't have become great companies, all three of them. Ola getting into international market, Oyo now getting into China and UK and many other markets. Or Flipkart getting sold at $21 billion would not have been possible if they had not kept pace with innovation. And they kept pace with innovation simply because they became companies which utilized artificial intelligence. It would not have been possible for Ola to become such a great company without artificial intelligence.
Okay, moving away from that to the other big reveal today, and that was really on the state of the Indian startup ecosystem. Now, on the face of it, the numbers look very encouraging. Nasscom spoke about how, nearly 7,000 to 8,000 startups were incepted between 2013 to 2018. It's led to job creation, direct job creation of almost 40,000. And 8 startups became unicorns in 2018 2019, which is a record of sorts. But the downside, as far as this is concerned, is a majority of the funding in the last year has been going to the larger startups, with the seed stage funding, the early stage funding coming down. What can be done here? What are the alternatives? What other policy push, incubation push is needed? I caught up with Nasscom President Debjani Ghosh for her perspective on all these issues.
I think we're at that stage where we are seeing the beginning of a very sustainable ecosystem, which is, to me, the biggest positive that comes out of this report. See, all these years we've seen a growth, and we've been excited by the growth. But I think right now we are seeing growth, we are seeing the right balance between consolidation, we are seeing the right balance in terms of innovation, the right trend, in terms of innovation. So it looks like we are at that stage where we are going to see the Indian startup ecosystem become much more robust, and we're seeing the build out of a foundation for a very sustainable ecosystem.
Right. And the only wrinkle perhaps that I felt, was the fact that you said how late stage funding has really taken off, but you are seeing some sort of pressure come in the seed stage. I mean, that just means investors are playing it safe. They're going after the same bets, more and more money, into the bigger established companies. How much of a worry is that? It
actually happens. If you look at the startup life cycle and investment life cycle, it's not a surprise. When you reach that stage and ecosystem where you have the growth stage suddenly becomes large enough, and it also is very exciting in India. There's some fabulous companies right there today. It's only normal for investment mindset or investment focus to move more towards consolidating funds and focusing more on growth companies, going deeper, which is needed. What we need is an and story. It's not either or. We need an and story where we also have sufficient focus on the seed stage startups.
That's right.
Because otherwise we'll kill innovation. We'll completely curb innovation. We need more new ideas. We need guys to come and try stuff, fail if needed, but you can't stop that pipeline, right? And I think there's a lesson in here for us from other countries. If I look at what Japan is doing, Japan is a very mature ecosystem, and in order to ensure that seed stage startups get their due focus, they've set up this institution called JETRO,
right,
which is not just about funding, but it's about mentoring, it's about capacity development, etc. I think India has reached that stage now where we need a sort of institutional approach for seed stage startup, and I think it's fair to expect that investors will move more towards mature startups. So maybe this is where government or some kind of an organization has to come in. Semi-government kind of a quasi-government organization has to come in, which will have a structured approach to ensure that the pipeline for seed startups do not decline.
Right. And in terms of the policies, do you think it's tougher? The situation stays the same when it comes to, starting up today in India? A lot of noise around Startup India, but on the ground, have things really changed? Does the government need to do more?
No, things have changed, and I speak to a lot of startups. I think things have changed. It's easier for startups today to start a business. It's way easier to get funding than it used to be. Scale is becoming easier because the market's there, etc. But that's said and done. I think today, especially with the way technology is getting ingrained into our daily lives, everything we do, where data is becoming pretty much the building block for business, right? It is absolutely necessary for regulatory frameworks to now come into play. I mean, so far we haven't had too many of those, but it's a natural evolution. And if we don't have it now, we are the ones who are going to crib later saying, how could you let this happen to us? So it's extremely important for the right frameworks to come in place. That said, there is no one in this world today who knows what the right regulatory frameworks are for new technologies. No one, no government, no one. And there's a lot of work going on to figure it out. So what India needs on one hand is a little bit of a different mindset when it comes to regulation. It needs a regulatory sandbox kind of a mindset.
That was the president of Nasscom, Debjani Ghosh. But time to get you two more top voices. And these are really the SaaS superstars, if I may say so. Girish Mathrubootham, the founder of Freshworks, one of India's leading SaaS startups, entrepreneurs whose Freshworks recently turned unicorn. I caught up with him, and Shekhar Kirani of Axel Partners, one of his earliest investors, and someone who's been betting big on enterprise startups such as Freshworks, BrowserStack, and many more. I caught up with them to understand what's next for Freshworks after becoming a unicorn, the broader picture as far as the Indian SaaS ecosystem is concerned. Listen into an excerpt of my conversation with them.
In the earlier days, we need to go and hunt for companies. Now we are getting a lot more inbound of high quality SaaS startups where we know for sure they're going to raise money, but we may not be investing and some other investor will take the investment. So investable category of SaaS companies on an annualized basis continuing to move up. And number of companies also, in terms of, you see between 1 and 10 million revenue, significant number of companies are starting to show up. About 10 million, there are like handful of those. Between 0 to 1 million, also quite a lot of companies starting to happen. Right. So overall, the ecosystem is building out. Everybody was looking for an example or a story, and thanks to Girish as a torchbearer, so it's showing that it is possible to build in a fast scale, globally great enterprise SaaS company, and people are following.
Right. Girish, you recently made news for turning unicorn in terms of valuation. What next after that? What is the focus going to be in the next 6 months to 1 year for Freshworks?
So can I answer it on a lighter note?
Yeah, you can.
Okay. So you see Shekhar's transformation. When he invested in us, he was like very formal, and now you can see his new hairstyle and badass. So now that we are a unicorn, we have seen this transformation in him. So what's next for us? Be a Decacon, and Shekhar will go to Burning Man. Yeah. So on a more serious note, I think we believe that it's very early days for Freshworks in terms of our new vision that we rolled out in June, where we announced Freshworks 360. So this is the coming together of our vision and strategy. Like, we rebranded from Freshdesk to Freshworks last year. So, and we told that we are unleashing our multi-product strategy. So Freshworks 360 is our customer 360 vision, which is where we believe the industry is going in terms of companies having a single platform to engage with their customers across marketing, sales, support. So I think we today have the product to deliver on the vision, not just the marketing talk. And with AI ML, we also recently launched Freddy, our AI ML engine, so which works across all of these products. So I think we are really excited, and I think we are focused on, we are growing at very healthy rates, and we are just focused on putting our heads down and executing on this massive opportunity in front of us.
Right. And Shekhar, the thing that we see...
I just want to add one thing, is that when companies cross 100 million ARR, the question always in their mind is how big is the market left to conquer?
Exactly.
Right? Yeah. So is the TAM big enough? But in the case of where Girish is going after, the underlying TAM is $30 billion. So what he owns today is such a small percentage of it. So
I think that's a cue for you, that your current ARR significantly.
That's what is exciting and motivating, and and potentially, as the momentum builds, his brand gets built, customer base gets built, endorsable customer gets built, engine is built. So now is real Freshworks in my mind to see from where here to build a really strong momentum, because the product is phenomenally well built. Right. Now all things are coming together. So very exciting times, what I would say, in the next 12 to 18 months.
That's why Axel also chose to invest in our recent round from the Axel US fund.
So he's keeping the faith.
Absolutely.
In that sense. Okay.
Confidence, more than faith.
Okay. But I mean, if you look at SaaS startups, the issue that some of them face is you cannot raise too much of capital because, the growth will not justify it, or there there will be too much pressure to return that kind of money. So will we always have a scenario where we have perhaps just one or two that are able to scale to, beyond 100 million to 100 million? There will always be a certain category of startups, that cannot go beyond, say, 10 million, 15 million. Is that going to be the nature of the market?
I think, first of all, we should demystify this, right? So, like, Freshworks till date has raised $250 million,
Right.
of which only $177 million was primary, of which we have more than $110 million in the bank. So we have just spent or burnt 67 million to grow the company north of 100 million. So you don't need a lot of money
Right.
to actually build and scale a SaaS company.
Okay. On that note, time to slip into a break. But when we come back, we bring you a conversation with three investors, Indian Angel Network, Bloom, as well as Orias, on what they look for as far as deep tech startups are concerned. And we end with a sense of the kind of startups that showcased right here at Nasscom Product Conclave. So take a break and come back for more on the other side of Startup Central. Welcome back to 18 Hours Startup Central. As promised, a conversation with three investors on the anatomy of a deal. Hear out my conversation with Indian Angel Network's Padma Ruparel, Sanjay Nath of Bloom Ventures, as well as Rehan Yar Khan of Orias Venture Partners.
There are two types of technologies that you can build on. One is open source and other is proprietary. So when you take open source technology and build a technology product, that's one part. It's not that I'm saying it's not doable. But when you're doing deep tech, you're also looking at what is the new innovative technology that you've layered it with, or you've created a proprietary around it. And I think those two really stuck in my mind as to say that there is new technologies which are getting developed for areas or sectors or problems or needs which were not identified earlier. So I think that is, that to me sounded the best definition, and it also allowed us to apply to a lot of sectors. So it's sort of become a horizontal, applying deep technologies, be it AI or ML or robotics. All of that sort of gets then applied to a variety of sectors.
The buzzword in the last year with respect to a lot of .ai startups, a lot of startups defining them as edtech, agri-tech, health tech, trying to solve very complex problems using technology. Is your portfolio now skewed towards such startups?
For a long time, tech was associated mainly with, let's say, B2B, SaaS and enterprise, right? And literally when you thought of tech, you thought of B2B, SaaS, enterprise in just those sectors. If you look at our own portfolio, how it's evolved, I mean, we've got gray-orange in a sense, which is, integrated combination of embedded software meets mechanical engineering meets hardware, very complex tech in that sense. Locus, which is AI for logistics, Tricog, which is AI for healthcare. I think one of the big drivers and the shifts in this is that earlier that tech talent at the level below the founders wasn't there, right? So you would have, for example, Samay and Akash at gray-orange who started it straight from campus, and they were robotics experts, but how do you build that depth, just below the founders? And I think that's a huge shift. If you look at our own locus, I'm sure Rehan, Padmaja also have that. We're seeing today PhDs, and this is not to say that you have to get foreign talent necessarily, but the fact is that earlier it was just tech, now it's data science, it's AI, ML, and there are courses, there's certifications in that, right? I mean, that has evolved. So I think that's a huge factor. So I think it's been quite an evolution.
And at the end of the day, will consumer-facing startups still get a lion's share of the money? Because even from a VC point of view, in terms of your own fund economics, the amount of money you need to invest, the scale comes in with respect to consumer-facing startups. It's not the same, when you look at non-consumer-facing startups, be it enterprise startups or deep tech startups. The cycles are much longer. The go-to-market time is much longer. So will it always continue to be a small part of your portfolio, a nice to have, portion to say that, I'm a VC and I do deep tech, but not the major chunk?
certainly is the potential to create many billion-dollar companies in the software space. And see, the characteristics of the two companies, Chandra, are a little different. So a VC fund will often try to balance the two. Of course, you'll have funds which are more sort of specialized in one area, like Sanjay was saying, but there are also funds which will balance the two, because the software product startups, they tend to have less mortality. They're sort of more steady, and you can typically, even at a Series A, Series B, if the company is not scaling because they have a bunch of customers, you can typically get an exit. So your downside is fairly protected on that. I agree with you that the upside may not be as phenomenal as that. I mean, take my own case. I'd invested in Dhruva in 2008. It's a billion-dollar company now. But I'd invested in Ola in 2011. It's a $7 billion company.
Okay, that brings us then to our last story, where we tell you about the kind of startups that showcased at NPC this year. What was interesting, what really stood out. My colleague Rahul Dama takes you through some of the interesting ones he spotted.
The focus this time at Nasscom Product Conclave is deep tech, SaaS companies really. So the startup showcase also is largely around that area. All in all, over 125 startups will be showcasing here. As you can see, startups have come from far and wide. This is the time for them to interact with fellow entrepreneurs. Also over 200 investors under one roof. So it sort of can't get better for them to understand what's really happening. Not everyone is really looking for funding. I was talking to some entrepreneurs. They largely want to get a sense of where the industry is actually leading to, what trends are really standing out, and what should they be working on. A lot of them also exploring collaboration. So that's what generally happens at an event of this magnitude. 2,000 odd people expected to attend this multi-day affair. Remember, Nasscom Product Conclave has been putting the focus on product companies. They focus on a particular sector every year. This time, as I told you, it's about deep tech and SaaS really. So that area hasn't really taken off in India, because there's so much of hand-holding that apart from regulations, investors have to stay invested for a long time. So that's really a roundup of the action from here. A lot of startups, a lot of deliberations, and hopefully some of them will walk away with some funding. Of course, you have the Emerge 50 winners who would be announced by Nasscom that talk about the top 50 product companies here in the country.
Okay, that brings us to the end of this special edition of ET Now Startup Central from the Nasscom Product Conclave right here in Bengaluru, India's startup capital. We will continue to bring you more updates tomorrow. Thanks so much for watching, and stay tuned to the channel for more news and updates.